how I generate income and how I turn my investing into a full-time and a primary income system is because I'm primarily or predominantly an option seller. So I sell a lot of puts, I sell a lot of calls. Sometimes I do buy, but the more fundamental question is why be a seller? It's because based on studies or statistics, as an option seller, provided you know what you're doing and you risk manage properly, you actually have a higher probability of winning as compared to a buyer. Why a seller? Fundamental question. If you're someone who has already sold something on Carousel or eBay or whichever classified platforms that are out there, you know that as a seller, what do? You earn money, right? You collect money, right? Same for options. As an option seller, what an option seller like myself does is I generate cash flow, I generate income. As a buyer, what do? Buyer does what? Buyer pay money, right? Okay. So of course, when you pay money, you talk louder lah, because the balance of power is in your favor. You can choose not. I can choose not to exercise, but why pay money and tie up my capital or my capital when I can actually use my capital to generate cash flow from selling options? Okay, so I'd like to assure everyone that yes, while the examples that Emin and I have shared about selling naked calls and all this are probably cautionary tales that may actually give you cold feet, but let me assure you also that as long as you know how to risk manage properly, you put in the effort to know and understand and learn about options, you know what you're getting yourself to, you have all the risk management measures in place, you actually have a better than average probability of winning. And in a short while, what I'll do is I'll go into the actual trading platform and I'll show you how do I actually generate option premiums. Okay, the 3-step FER process. Okay, now let me just elaborate very quickly. FER, the F for fundamentals, but not so much the fundamental of the stock, but it's more what are you fundamentally, what type of investor are you fundamentally? From there, it's about understanding yourself, what kind of investor you are, what's your risk profile, what you like, what you don't like. From there, develop into specific areas of expertise, and with those expertise, use that to analyze potential stocks or ETFs. And then the final step, which is an R or realization action, is to take action. Okay, I use an R instead of T, so as not to call it a FAT process. Okay, it doesn't sound very nice. I have always believed it is important to understand yourself, know as much as possible where your strengths are, where your weakness, of course, and then your weakness also guide you to not do silly things, okay, not to shoot yourself in your foot. And of course, once you know what kind of investor you are, where your strengths, you can tap on your strengths and work on your strengths to find stocks that actually work for you or work to your strengths. So why is that so? Let me just go to the next screen. Now, assuming that you are someone who likes a financial sector, okay, or you're already someone who working in the banking and finance sector, for example. So you are naturally comfortable with the finance industry. So that in itself is likely to become your circle of competence, means what you're strong in, what you are good in, or what you can also choose to develop to yourself in terms of what you believe in. So for myself, I believe very strongly in the tech sector, in the growth potential of the technology sector. And within the tech sector, the subsector, what do I like a lot about? I like the EV, the electric vehicle. So because I like and I have conviction about the tech sector and I like the EV sector, the subsector a lot, I would naturally spend time and effort and it won't come across as very tedious for me, because since I like it, I'm more inclined to read up on it, or to be interested to acquaint myself to learn more about those. So I will invest time and effort to learn about electric vehicles, or even as the associated industries relating to EVs. For example, batteries, right, or clean energy, right? So these are, so with that, the opportunities or the potential is in a sense limitless for all of us. So back to this example of financial sector. So if you're already familiar with finance sector, you would spend time to learn more about this, and naturally it will actually lead you to the next step or stage 2, which is then you will spend time effort to find stocks that are good within the financial sector. For example, the Bank of America, which incidentally is one of the top 3 holdings of Warren Buffett. So if Warren Buffett invests a lot in Bank of America, I think if you follow Buffett, not likely you can go very wrong. Or if you're someone who likes maybe the future, like the future that's currently at the doorstep, the fintechs, you can look at Square, for example, or MasterCard, or the likes of Visa and so on. So those are the competencies that you can develop based on your interests. And once you have developed the interest, you will start to analyze and have very clear criteria of what kind of analytics or analysis tools that you want to use. For myself, I use this 6. I will look at companies that have good earning potential. I look at companies that can deploy the capital efficiently and get the good returns on how they employ the capital. I will look for companies that have very low gearing. That means they're not highly leveraged. I look at companies that have pricing power. That, for example, if let's say if due to inflation prices have increased, they still have the ability to raise prices, and even though the customer can't pay, but they'll still suck it up and still spend their money with you. So in a sense, they will still be able to have a reasonable basis to consistently generate profit. All right, I'll have a lot of companies that have very strong cash flow, because I want companies to have strong cash position that allows them to have the ability to acquire other companies when there are opportunities for them to do so, to position them to future-proof themselves, or maybe even to pay out dividends to you without having to resort to bank borrowings. Right? So these are the criteria, and of course I use a lot of tools that are free out in the market. Okay, that you don't really need to pay money unnecessarily. And why is that so? Because, as you remember, I don't have an income from a full-time employment, so I do watch every dollar and cent that goes out of my pocket, out of my wallet. So if there are tools out there that are free for you to use, that you don't require to pay, all the better, right? So and there's no, and when these tools are effective enough for you to use, this will be the tools that I will rely on, and these are the tools that I also I share with my mentees, my coaches, for them to say, hey, leverage on these tools. These are free to use tools. These are excellent tools for you to use. So why need to pay, or why need to spend money? Why is there a need to spend money? There's no need to spend money unnecessarily. Okay, so again, Finviz is one of the tools. Morningstar is another tool. Okay, speaking of which, I would like to maybe offer a tip for everyone since we're on this topic. Okay, there is this tool called Morningstar, which I rely on. Now, let me share with you this company. Okay, folks, Citibank. Okay, read my lips, Citibank. It's not Shittybank. Okay, the reason coming up very soon. Now, look at this particular line. Okay, so book value per share. I think for those of you who have diligently attended Emin's class, you will know that this is a proxy to how much the business is worth. Okay, so on a per share basis, if Morningstar assesses Citibank to be worth $88.18 on a trailing 12 months basis per share, let's take a look at what is the current share price of this. Remember, I said I've given you a big clue already. It's not Citibank. Okay, so look at this and look at what is the trailing 12-month book value of Citibank. And what is the conclusion that you can share? Let me go to my trading platform. This is the platform that I use. It's called Think or Swim, okay? Now, let me show you what will be my trade plan. How do I intend to trade Citibank? Now, what I will do, given that I have assessed Citibank to be undervalued, because on a book value basis, that means the fair value or the fair value, the so-called fair value of Citibank is about $88 a share, right? So what can I do now? I can choose to buy the Citibank share outright, 100 shares at $79, or I can do something better. I can opt to sell a put, even though this is a naked call, but we can manage our risk by putting aside money or having money ready to be able to buy this stock. So if the fair value of Citibank is $88 and currently the share price at 79, what I'll do is I will sell a put at 79, or maybe even better, I'll sell a put at $80. Okay, the market hasn't opened yet, so we won't know what is the actual price. So I'll put in the order for let's say at $80. Okay, but if I want to be greedy, I say, okay, in case it drops in the course of the day, I don't mind. I will earn $68. A little bit, never mind. But still, I'll earn some premium, right? I'll sell a naked put, which is okay with me because I'm prepared to buy this stock because it's undervalued. I think it's good value for me to enter and have a little bit, dip my toes, have a little toehold, and then dip my fingers a little bit, have a little bit of holdings in it. Because if it's undervalued today, sooner or later, investors or institutions going to come in and say, hey, this is going to be a good buy. And then everybody's going to chong and then come in. And then when there's a lot of demand, you can be assured that the share price will actually go back up to what it should be, the natural level, which is the fair value level, right? So if I do a sell put, I'll sell one contract, which is 100 shares at 68 cents times 100 shares is $68. So I will actually earn 60 after net of fees. I'll actually earn about $67. Now, assuming come 11th of Jan, which is this coming Friday, if the share price really dropped below $79, let's say $78.99, it's okay. I will get assigned 100 shares. It's okay. I would have acquired a stock which is lower than the price that I would be paying for if I were to buy the shares outright today. And in the meantime, I would have earned some premiums, okay? The premiums a bit low, okay? So if I think that the fair value is $88, I may enter at $80 and earn $117 premium. So this will be some of the strats. Just to complete the FER process, we've talked about stage one, which is understanding what kind of investor you are, working on yourself. Then from there, expand on to finding out what good stocks to invest. And then the third step, the most important step, is to take action. How to take action? Use technical analysis, okay, candlesticks and the likes, and then use the right option strategy to enter in the trades and generate the income for yourself, generate the cash flow, okay? So as part of the program, I will cover TA. I will coach on how to use TA. Let me just state it up front. I'm not an expert in TA. I don't have a chartist qualification, but I know enough about TA to use it to help me to analyze whether the stock is expensive, whether the trend is bullish or bearish, and as a result, what is the right kind of option strat to use. Okay, so as part of the program, we learn about candlesticks. Most importantly is what is the trend. We just need to know what is the trend. Is it on the uptrend, downtrend, or is it turning? Is it on a recovery? Is it on the correction? And then the option, the appropriate option strat will eventually be so-called decided upon based on all these factors. So what is my performance? What can I shout about in terms of, and how am I able to generate an income that is almost on par with what I was drawing previously as a full-time salaried employee? So for the whole of, now, let me just qualify this. I started on being a full-time investor back in 2017 when I decided to take the plunge and leave corporate life for good. After that, it took me about 2 years to really get into the groove, and 2 years plus, and really to internalize all the learnings and also make all the mistakes I had to make, including the one that I lost 50,000 in one night. Okay, so it's very painful, but I'm glad, in a sense, looking back in hindsight, I'm glad it happened, and it happened for a good reason, is to make sure that I don't repeat the same mistake again. So for the whole of 2020, let me just show this. Okay, so this is in US dollar, so it's just a little shy of a 6-figure performance. Okay, so my year-to-date result is I'm almost halfway of what I had achieved in 2020. So I'm happy with what I'm happy, in a sense. I'm happy, but of course I want to do better. I mean, who doesn't like to earn more money, right? So this is what my aim is, really to replicate what I had achieved for the entire 2020. And do I become a vampire by not sleeping the whole night? No. My typical day or trading day is like this. In the morning, when I wake up after sending, before pre-COVID, okay, after sending kids to school, after sending spouse to work, come back, switch on the laptop, okay, I will open up my trading platform, and then I will review, I will analyze what trades went in my way, what trades did not go my way, and then I'll just set objective for myself. Objective in the sense that, okay, I will decide what are the stocks that I want to look at doing options on for and then I will spend the rest of the morning and the afternoon using my 3-step FAR process to research on stocks and read up on the market, read up on and deepen my understanding. Okay, so from there, on all the research, I'll generate a watch list of stocks. So when the market opens, I will then put in the orders, or I put in orders before the market open, and I'll execute the trade. And then typically by 12 a.m., I will just switch off my computer and I will go to sleep. Reason being, I don't behave like a day trader. I do options that are expiring a month. For the month, I'll do monthly options, or I'll do the weekly options. So which means the real action only happens on the Friday of that week or the 3rd Friday of the month. So that's my typical hours that I put in. I would say the most effort is actually focused on the research and the analysis. The execution is just a fraction of the time that I spend in the trading. If I'm doing weekly options, it's typically the first 3 days of the week. If it's a monthly option, at the beginning of the month, once I put in a trade, I will let the option run, and then only at the 3rd Friday of the month, then I will just see how my options has turned out.